Habit 2, know your starting point. In order to get to know where you want to go, you first need to know where you are at. Now that we've had a chance to discuss your goals and what's important to you, it's onward to the next step to find out where you're at right now and to ensure that you're on the right path. Financial stress is often reduced when you know your goals and where you stand. From this point, you can start working on your own path from where you currently stand to where you want to go. Discovering your starting point involves a bit more homework. Relax, it's fun homework. At least I find it fun. It should take approximately 40 minutes to an hour to complete. Some are faster, some take much longer. There'll be no judging, there'll be no grades, so take your time, be honest, and have fun. It's highly recommended that you do this with your significant other. You can actually turn it into a date. The next couple of pages in the book show our info gather process that we help with our clients. You can download this process. It's an Excel spreadsheet that you can find on designanevenbetterfuture.com under the resources tab. This is where you will write down your income or what you earn, your assets, what you own, your debt, what you owe, insurance, what you have and what would you like to have, and then of course your monthly expenses, what's going out each month. Once completed, we'll do a little math to calculate your net worth, your expected net worth, and your financial potential. We'll determine where you're at right now and see if you're on the right path. Most people find the results very interesting. Now, we understand that you may have never reviewed and documented all your financial life, including your debt and monthly expenses in one place before. Understanding your monthly cash flow is essential to building a proper cash flow plan, to reduce your taxes, to invest more efficiently, to find money that may be falling through the cracks, and to live an even better life. If you are unsure about the numbers to fill in, please estimate them the best you can. As with any design, the better the data, the better and more accurate the results. Here's some helpful tips when you're doing the info gather. Be honest in all areas so that you are getting the best results. Do this together with your significant other. As I mentioned, turn it into a date, have fun with it. For monthly expenses, consider reviewing your bank and credit card statements for the past month, or even for the last 4 months if you're ambitious. People often underestimate what they spend on groceries, convenience items, dining out, and coffee. The more precise your input, the more accurate your financial plan would be. I see people spend car payments at Tim Hortons every month and they don't even know about it. Again, have fun with this. You can find the info gather spreadsheet on designevenevenbetterfuture.com in the resources tab. That's designevenevenbetterfuture.com under the resources tab. Start filling out the info gather right now. There you go. You finished filling out the info gather. You filled out how much money is coming in every month or what you earn. You filled out how much you own or your assets. You also included how much you owe or your liabilities, the amount of insurance that you have and want, and then you filled out your monthly expenses or the money that's going out every month. After filling out your monthly expenses, do you feel like you're in the black, the red, or you're breaking even? Does it feel like the more money you make, the more that just seems to disappear or falls through the cracks? Were there any obvious areas where you could save money? Now is the time to calculate your net worth. The healthy, wealthy, and wise realize that your net worth is far more important than the amount that's in your checking or savings account. Add up all the assets from your asset sheet and write that number in the asset column. Do the same thing with the liabilities or what you owe. You should note, assets such as the money in your bank accounts, tax-free savings accounts, the cash value in your whole life policy and in open investments would be considered liquid assets, meaning you have immediate access to these funds. On the other hand, the equity in your home, your vehicles, and GICs would be considered fixed assets because they take more time and effort to convert into cash. Now, while an RSP would be considered liquid, it has significant tax consequences. So for ultimate liquidity, usually investing outside of your RSP is a good strategy. We'll talk more about this in step 4. So to calculate your net worth is simply by adding up all your assets and subtracting all your liabilities. So when you do this, what is your net worth? Write it down. To calculate your expected net worth, you simply take your age, and if you're doing this as a couple, you take your average age, multiply by your combined annual income, and divide by 10. What's that number? Write that down. And then to calculate your financial potential, simply take your net worth and divide it by your expected net worth. So based on the book, The Millionaire Next Door by Thomas J. Stanley, they use this simple formula to calculate your financial wealth and your financial potential. They said a value of 2 or greater indicates wealth or that you're on your way to wealth. 1 is about average, and anything below 0.5 means you're behind the 8 ball. You're lacking behind your financial potential. So where do you find yourself on the scale? There you have it. Any surprises so far? The health of your business. Calculating your financial potential gives you a good picture on your financial health, but how do you determine if your business is on the right path? MacLellan, sorry, I butchered his name. Like I said several times, can't say big words, but MacLellan uses his profit first assessment to help business owners figure out what they need to do with their allocation of money. I'm a big fan of his book, Profit First, and Mike's accounting principles, as they account for human behavior and incorporates the philosophy of the wealthy, which is described in great detail in Habit 4. He says, if you have a profit less than 10% net revenue, your business has fallen short of its financial potential. So at the end of the year, after you paid yourself, your staff, expenses are deducted, and the tax man took their share, if your incorporation has less than 10%, it's time to reassess your business health. Habits 3, 4, and 5 will help you put profit first and increase the health of your business. The Profit First assessment can be found with additional resources at designanevenbetterfuture.com. So what's the point? Know that your net worth is most valuable. It's not what's in your checking account. You need to know where your starting point is to get to know where you want to go. Having all your financial records in one place will save you time and energy, which is your most valuable resource, and will help you get a head start when designing your even better future. The remaining habits described in Grow, Control, and Keep Your Money will help you increase your net worth and help make that path to financial independence easier and more enjoyable.